Okay, welcome back to Only Divergences. Here we focus only on the technicals and more importantly, those beautiful divergent patterns that can produce massive returns. Before we start, as always, a big special thank you specifically to you, the one listening who likes my videos, who subscribes. It means a lot more than you think, just clicking that little subscribe button. So I do appreciate that. I'm going to be here with you as we navigate these markets, and all I ask is that you keep me accountable and join me on this path. I've got 40 subscribers right now, and I would love to get to 50 by the end of the month. Okay, today is Wednesday, September 22nd. It is 4:07 p.m. Markets are closed, and Robinhood closed the day up just shy of 11%. Look, this video was one that I wanted to update for some time, but we had one of our subscribers, Robert, make the request, and I can tell he's a holder. I hope he's a holder. And he was really excited about it last week when I started talking about Robinhood. Go back and watch my videos. I've been outlining the potential upside here for a long time. It's all there. There's a link in the description, but I'm gonna put the link right up here on the right. Top right over here. You can click that little icon and watch it. I published a lot of analysis over the past few weeks, but the only one that I've been strongly bullish about, at least for a nice little move, has been Robinhood. And it has only been because of the technicals. I'm a strict technical analyst, and I hope to convert all of you who are listening to my ways by showing you what I see. Now, you might not be a client of mine, you might not be a subscriber to my YouTube channel, you might not even like my videos, but you're going to see in 3 months' time what ignoring the news, and I think the Fed made an announcement today or something like that, and just focusing on the technicals and probabilities, what that can do, not just for your financial freedom, but your ability to be confident in this market and really in all markets. So again, like this video and subscribe, but on to the main event, Robinhood. Okay, so as always, we start off with the weekly chart to provide broad context. We noted the large move higher, followed by a consolidation that got slower and slower as it got lower and lower. And really, that's all we can determine from looking at the weekly stock chart of this stock, because there's so little weekly information because the stock just IPO'd. So with that said, we move on to the daily time frame. On the daily, we pointed out this falling wedge, which I'm just going to quickly draw here very briefly. So I think this is where I want to put it. So you can see since the breakdown of that kind of big explosion here, what's happened is we've been contained to the upside, right, by this trend line, which it really wasn't a trend line here because there were only 2 tags, but then, came here, that validated it in technical analysis terms, validated again. You can see the small little wick just went up to the top, touched it, validated again, and then what happened? We broke out above it. So when you break out above it, that's when you need to start paying attention. I know some technicians who, you break out above it and they just go all in, right? And you could do that. But what I like to do is I like to be a little patient and I like timing a little bit more. And so what happened is as soon as we broke out above it, we moved a little bit higher, but not with strength, but then we pulled back. And then subsequent to that, yesterday and today, we've had a combined move, I think, of just around 15%. Yeah, moving from 40 to 46 or 48 or 47, excuse me. And so this is a textbook falling wedge, breakout, pullback, bullish divergence pattern. Now, something I want to say. While the stock itself only went up about 15% or whatever, near-term options returned something in the range of, I think it was around 600 to 700% over the course of the last 2 days. And now that is what I'm hyper focused on. Okay? Because if you take just 10% of your portfolio and you are patient and wait for these trades, you only need to make 2 or 3 of them a year. And you're set. You're an independent investor. You know what's going on. You don't need to day trade. You just need to focus on these types of trades. And that's what I'm doing with this channel. And that's what I hope to be able to provide to all of you listening right now. So we got the breakout. And the obvious question right now is, how high can we go? Well, it's hard to say. We are now positive on the MACD. There's always potential for volatility. I mean, even in the after hours, we're down a little bit, you know. But in essence, what has happened here is that the buyers have overcome the sellers, and it has happened through a shift in momentum based on the technicals. This is the holy grail of technical analysis patterns and setups. And this is what I focus on. Although, you know, you can apply it to, you know, there's many other patterns there. This is the one that almost always delivers, and delivers, you know, 600-700%, right? So that's why I'm focused on it. And that's why my channel is called Only Divergences, because if you only have a couple of these a year, you're set. So on to the important question, where's the top? Now, unfortunately, I can't call that. Okay. We had the divergence playing out, and while I'm able to tell you where the bottom might be to go long, I'm not yet skilled enough to tell you exactly where the top is. But look, we are now above all the moving averages on the daily time frame, right? Something we haven't done in a long time. I mean, here maybe, but you really can't count this. And more importantly, we can see that after a long period of negative momentum, evidenced by a negative histogram, the red histogram on the MACD, we can now see we've got a nice little green positive MACD momentum shift. So what does that tell us? It tells us that the momentum has shifted. Right? It's basic, right? But if we want to have a better understanding of this, we're going to have to take a look at the hourly time frame. So I'm just going to take a look at this. And if you watched the previous video, you know, I outlined this, you know, the higher low, higher low, higher low. That's a clean bullish divergence. And that's really where you want to be hyper-focused. I'm not diversified. I look for these. I conduct analysis daily. I look for these, and when I find them, I execute, right? So here we have a clean move higher, and, you know, where do you want to exit? Well, here's one thing that I want to point out, right? The DMI indicator right here often does a very good job of signaling what move is a trend move, what move is a counter trend move, and when is a trend over, right? Let's use this example here. Here we had elevated green, which when you have persistent elevated green, oftentimes can be a buy signal, right? So if we go up to price, we can see that it actually was a buy signal, and the stock moved higher. And then what did the DMI tell us? Well, we saw that, first of all, black here, which indicates trend strength, was down. And as soon as red started to rise, black started to rise. So what that told us is that, yes, we have a strong near-term trend, and that's why we moved from 43 to 50 in a few days. Actually, in a couple days, I think that was. But what happens is as black starts to flatten out, and as red also starts to be up here for a persistent amount of time, you start to see a bit of a shift in momentum, and it rolls over. Now let's use this as an example and compare it to where we are right now. First things first is that we have a much stronger setup here with these bullish divergences and with a falling wedge breakout of a breakout that is days old. So that's why I'm saying, actually not days old, weeks or months old. Months old, there we go. So what I'm saying is that the strength behind this move is actually a lot stronger than we may be anticipating. The setup here is a lot different than the setup that we had here. Okay, we have to focus on that. But also, given what I've outlined with the DMI, well, let's take a look at where we are right now. So first things first, red is at 43.50. Red is really high. It's actually the highest it's been in a very long time. And you can see that when we got up to these levels, that usually meant in this one that the upside for the time being was limited. Now that being said, we can see that at that point what happened was you had an elevated red that was very far removed You can see this big gap between the black. So the black, which is the trend, is trying its best to indicate that there's trend strength. But the bigger a gap you have between this direction indicator and the trend indicator, the more you should be a little cautious. So what happened? Well, that's kind of what happened today, right? We had red elevated, and we know that we had the spike at the open. It was a gap and a spike, but then we came down quite a bit, actually. And that's what the market always has to do. If you have this big spike, you have to ask yourself, does that allow me to move higher? Or do we need to blow off some steam here and blow off some overbought conditions, near-term overbought conditions? Well, right now we have a rising black, but it's rising pretty fast, right? And we have elevated red, but it's a second elevated red. So again, we're moving higher, and it's happening with strength, but the near-term volatility pullback potential always exists, just like it existed here. So if you can't already tell, I'm talking about the potential for options here. If you hold this stock, first of all, if you hold the stock and you listen to me when I was talking way back, you're good, you're fine. I think that you don't have a lot to worry about here. But what I'm looking for is the 300, 400, 500% returns, or 200-300% returns in one day on options. All right, I'm trying to find out how to get those and how to avoid any drawdowns. So what that tells me here is that, this is strong. Like, this looks, it's above all the moving averages. It looks like it wants to go higher. And this right here, as much as this is very precarious and you got to be careful, there remains a very small possibility that the probability of a big gap higher tomorrow above 50, let's say, still exists. Now, that's not the question that we need to ask ourselves. The question we need to ask ourselves is, what do we do tomorrow? The stock has gone up quite a bit, okay? Could it explode higher tomorrow? Absolutely. But I need more than could to justify initiating a new position, especially with the near term as extended as it is. I took profits today, twice, and I think I'm not alone. So really, to summarize what's going on here with Robinhood is that we have broken out of a long-term downtrend, and we are now mounting a longer-term uptrend, if you think about it. Now, one thing that we have to understand is that we're you can see this level here, right? And as a technician, you just have to ask yourself a couple questions, right? Like, let's take a look at the green right here. See how low it is? How many times has green been this low? It's never been this low. Well, actually, here it was low. Here it was low. And what happened here? Well, we had a real big pullback, right? Well, two things happened. One, we actually moved higher, but then subsequent to that, we had a real big pullback. So what does that tell me? As somebody who's looking for a good options trade, it tells me that the risk or reward of going long tomorrow, regardless of where the stock opens, is not favorable. As I said, I've taken profits. Robinhood could go higher. It made this beautiful setup, and I'm going to continue to look for these types of setups in Robinhood and in other stocks as well. I wouldn't be happy if the stock pulled back, because I think that would compromise the potential for seeing some really good patterns coming up. But in any event, for me right now, I'm not closing this trade, so to speak. I will continue to track Robinhood, but right now, as the stock moves higher, the risk reward diminishes, right? Because people are taking profits. You want to ask yourself, where do you want to be? I'm just going to quickly take a look at the extended hours. You can see we're pretty strongly overbought here, right? So this is good. This is good that we're moving higher here. But as I've said before, when you have a rising black and rising red and falling green, oftentimes that indicates that, yes, we are in a strong trend and this trend could move higher, but also that the trend could be slowly coming to an end, or at least the current move could be slowly coming to an end. And that's what concerns me. So from a risk reward perspective, Robinhood has given all the meat that we are looking for. I'm not saying that there's no meat left on the bone. In fact, I think there is still some meat left on the bone, but I think that it might be a little volatile for now. I've got my profits for the week. I'm happy with them, and I'm not going to be chasing this. And I encourage you, if you're listening and if you're a subscriber, not to chase stocks because, look, I'm tracking about 100 stocks, and I can tell you that the opportunities are going to come. You just have to make sure that you're watching my videos, you're subscribed, and that you like them. And I can tell you that these will come, and you don't even have to pay me anything. This is totally free. So with that, I'm going to end the video here, but I will be updating Cameco tonight. I will be initiating new analysis on Zoom, DraftKings, Upstart, and Facebook. So thanks again for watching and listening all the way to the end. Remember to like and subscribe, and I'll see you later today. Take care.